Hi everybody, and welcome to today's webinar on ESOS Phase 2, how to prepare and optimize your reporting. I'm David Wynn, the Head of Client Services at Greenstone, and today's webinar is co-hosted between Greenstone and Carbon Smart. So we've got half an hour today to take you through some slides, and I'll quickly go through what the agenda will be for today's webinar. Using GoToWebinar, please do feel free to send in any questions, and we can follow up on any specific questions that organizations might have about how ESOS Phase 2 is impacting their individual organizations. So in terms of an agenda, I'm going to shortly pass over to Dan Murray, who's a senior consultant at Carbon Smart, and he's going to be taking us through the bulk of today's content, looking at the ESOS Phase 2, the key changes in terms of Phase 1 versus Phase 2, and then the process and how to prepare. So looking at a few different routes of compliance and the opportunities for businesses that ESOS presents. He'll then also touch on some of the equivalents in mainland Europe, where ESOS is obviously a UK interpretation of EU legislation. And then just to close out, I'll be going through a couple of best practices around collecting data related to ESOS, and then finally looking at the future in terms of managing and monitoring initiatives. Once they've been identified through ESOS, then once you've got that report and good piece of paper, how you can actually manage those initiatives going forward after the exercise and getting the most value. So what I'll do now is I'm just going to pass over and give control of the screen to Dan at Carbon Smart. So Dan, over to you.
Thank you, David. Hello, everyone. So as David mentioned, I am Dan Murray, a senior consultant at Carbon Smart. But without any further ado, let's get stuck into the webinar. So by way of an introduction to ESOS, ESOS is the Energy Savings Opportunity Scheme. It's the UK's response to Article 8 of the Energy Efficiency Directive. As David mentioned, and as we'll touch on a little bit later, each member state within the EU has their own interpretation of Article 8. Broadly, it's the same. ESOS and Article 8 more generally is designed to capture large businesses. Within the UK, there's two qualification criteria for large businesses. You can either have over 250 employees, and that includes all staff regardless of whether they're full-time or part-time, or you can meet the two financial criteria, which are having a turnover in excess of 50 million euros and a balance sheet in excess of 43 million euros. Once you've worked out that you need to qualify, you then need to measure and audit your UK energy consumption. ESOS operates in 4 yearly cycles. So ESOS Phase 1 occurred in 2015, had a compliance deadline of the 5th of December 2015. And ESOS Phase 2, the compliance deadline is 4 years after that Phase 1 deadline, so the 5th of December 2019. There's also ESOS Phase 3, which is planned for 2023. So moving on, what's changed from ESOS Phase 1 to Phase 2? Well, to be honest, broadly speaking, the requirements of ESOS itself are pretty much the same. Indeed, the Environment Agency actually hasn't issued a revised guidance for Phase 2 yet, although they do plan to do so in the coming months. However, the world itself has moved on quite a lot over the 4 years from Phase 1 to Phase 2. The technology itself has continued to develop, and even where technologies haven't necessarily made great leaps in terms of energy efficiency, the implementation costs have fallen. Things like LED lighting, for example, are much cheaper to implement now than they were 4 years ago. The regulatory landscape itself has changed as well. So whereas you may have factored in things such as the CRC tax in 2015 into your business case, that's been scrapped from next year, and the climate change levy is increasing to compensate. So for example, the rate on electricity will increase by 45% in 2019. These are all issues that you really want to factor in when you're developing the business case for the opportunities that you identify. So it is relevant. Compliance routes themselves have also progressed from Phase 1 to Phase 2. So we'll touch on the compliance routes available a little bit more later, but one of the ones available is ISO 50001. Now, the ISO 50001 standard evolved in August of this year. It's now more closely aligned with the 14001 standard, which was itself revised in 2015. There's a great greater emphasis now on continual improvement. So the compliance routes themselves have progressed. So moving on, what process do you need to follow with regards to complying with ESOS? Well, it's always a good idea to start with developing a compliance plan, which effectively acts as a project plan. You need, when you're assessing what you need to include within your ESOS assessment, you need to be aware of the fact that if one entity within the UK corporate structure qualifies, then the whole corporate structure within the UK is also brought into scope. So spending a bit of time developing a plan, working out which entities within your organisational structure qualify and what that means in terms of which assets and sites you need to include within your 100% consumption, just allows you to be a little bit better prepared. Once you've developed that compliance plan, you can then measure 100% of your UK energy consumption. Now, that 100% UK energy consumption needs to cover a 12-month period, which includes the qualification date of the 31st of December 2018. That means that you can't wrap up measuring your 100% energy consumption until the beginning of next year at the earliest, but we are within the data collection period that you can use. So you could, for example, go calendar year 2018, you could choose to go 1st of February 2018 to the 31st of December 2019. There's flexibility in choosing a data collection period which perhaps aligns with your existing reporting periods. Once you've measured 100% of your UK energy consumption, you then need to move on to auditing 90% of it. Now, you don't necessarily need to wait until you've measured 100% before starting on that auditing. We have a number of clients, for example, who've already kicked off their ESOS compliance and have carried out their audits this year in 2018, and then we'll wrap up the 100% energy measurement next year. You don't physically have to actually go and see sites and assets that account for 90% of your energy consumption, but you do need to audit them, which can include things such as profiling. So looking at how your energy usage breaks down, looking at how it's affected by variables such as patterns of usage at your buildings, ambient temperature, and so on. That's really a crucial first step as well, because it allows you to not only identify anomalies in your energy consumption, but it also informs your thinking before the site visits occur. Site visits are essential when it comes to ESOS compliance. The regulation itself isn't prescriptive in terms of the amount of site visits that you undertake, but you do need to see what is termed a representative sample of your site. So if, for example, you have 100 sites that are very similar in their makeup, perhaps they're all office spaces or restaurants, you could get away with seeing a relatively low proportion of those sites, because the opportunities that you identify at one are going to be similar to the opportunities that you identify at another. If, however, you have a very varied site portfolio, so if you have offices, manufacturing sites, distribution sites, and so on, then you'll probably need to see a higher proportion of the overall sites, because the opportunities available at different sites will vary significantly. Once you've done that auditing, you then need to calculate your energy savings opportunities which have been identified. You need to obviously calculate the energy savings, but where possible, you also need to perform a full life cycle cost analysis on those opportunities as well. And that's where the previous slide, where we talked about what's changed from phase 1 to phase 2, comes into account. When developing the business case, you need to factor in things such as the taxes that you're paying on the energy that you consume. So performing that full life cycle cost analysis will really give you the information that you need to develop that business case. Once you've done that, you need to compile everything into an evidence pack. That evidence pack needs to be reviewed by a board level director from your company, but it also needs to be reviewed by what's termed a lead assessor. Lead assessors are members of approved professional bodies, and they're qualified to sign off on ESOS assessments. We have 2 in-house lead assessors at Carbon Smart. Once you've got sign-off from the board level director and the lead assessor, you then need to notify the Environment Agency of your compliance. You don't need to actually share the evidence pack with them, you just need to retain it on file for yourself, and you need to fill out a questionnaire online. Now, the portal that the Environment Agency use isn't actually live yet, but we've spoken to them and they do anticipate that going live imminently. It's about 50 to 60 questions in total within the questionnaire. It touches on things such as who's your lead assessor, who's the main contact from your business, what compliance route did you choose, and so on. Once you've completed that questionnaire, as I say, just retain the evidence pack on file and you're good to go. The Environment Agency have conducted a series of sample audits within the past 4 years on phase 1 compliance. Carbon Smart worked with approximately 100 businesses for phase 1, and 5 of our clients have been audited, so approximately 5% in our experience. What the Environment Agency will do is ask you to send them your evidence pack. They'll take a look over that, and then they'll come on site and have a look just to make sure that the compliance route that you selected was appropriate for your organisation. In about 3/4 of the results that the Environment Agency released, some form of remedial action was required. Of the 5 clients of ours that were audited, 0 remedial actions were highlighted. So we're confident in our compliance approach, and given that there's been minimal changes from phase 1 to phase 2, we're confident in our approach for phase 2. So moving on, what compliance routes are available to your business? Well, there's a methodology that we just talked about, conducting ESOS compliant energy audits. There's also ISO 50001, which I've touched on a little bit as well. Energy management systems are essentially about putting the processes and procedures and documentation in place to ensure that energy management is firmly embedded within your organization. ISO 50001 isn't the most cost-effective route to compliance. It isn't the easiest, but it is the route to compliance which will have the biggest benefits to your business in terms of really embedding energy management in the way you operate, and therefore the energy and financial savings that will be attributed to the process. Now, if you have an ISO 50001 energy management system which covers all of your UK assets and thus 100% of your energy consumption, then all you need to do, quite simply, is get a board level director to review the energy audit outputs and then notify the Environment Agency of your compliance. So a relatively quick and easy process. If, however, you have an ISO 50001 energy management system which only covers part of your UK energy consumption, then the first step is to measure 100% of that consumption. You then need to cover off whatever proportion of your energy consumption isn't covered by 50001, such that the overall proportion covered by 50001 and energy audits surpasses the 90% threshold. You then need to get both a lead assessor and a board level director to sign off on that before you notify the Environment Agency. And finally, the 2 other routes to compliance available for businesses with regards to ESOS is display energy certificates, which are mandatory for public sector organisations, but some private sector organisations also have them, and Green Deal assessments, provided that the Green Deal assessment was completed within the compliance period, which runs from the 6th of December 2015 up until the compliance deadline for phase 2, the 5th of December 2019. So moving on, how can you make the most of ESOS? Well, site visit prioritization is something which I always talk about with clients. For example, if sites were audited as part of phase 1, if sites account for a large proportion of your overall energy consumption, if they've received less attention compared to other sites in the past, or for example, if sites you're aware they're scheduled for refurbishment in 2019, then you might want to use that information to say we either do or don't want to see that site. It's also worth noting that you only need to include assets within your 100% energy consumption that you hold on both the qualification date, which is the end of this year, the 31st of December 2018, and you also hold on the compliance deadline, the 5th of December 2019. So if, for example, you know you're going to dispose of a site within that period, then it wouldn't make sense to choose it for a site visit. Next, I think it's important to find an appropriate and experienced lead assessor. All lead assessors, given they have the appropriate qualification, will be qualified to sign off on your ESOS assessment. But obviously, different lead assessors have different backgrounds. Certain lead assessors will have greater levels of experience of auditing different sites. So it's worth reaching out to a few lead assessors and finding the one that's most appropriate for your organisation. It's then important to align with existing priorities or strategies that you may already have in place. So, for example, if your organisation has a large vehicle fleet, and the fuel that you consume within your fleet accounts for a large proportion of your energy, then you might want to choose an assessor who has a particular focus on fleet management. If, for example, you want to implement ISO 50001, but you're worried that you don't have time to implement it before the compliance deadline at the end of next year, then maybe you want to approach a lead assessor who can design an approach for you which ticks off certain requirements of ESOS. So, for example, with 50001, you're required to establish an energy baseline and perform an energy review. So perhaps you want to look at performing ESOS in a way that meets those requirements of 50001. And finally, as I've mentioned before, you're required to engage with a board level director as part of the ESOS process. We all know how important having senior buy-in is when getting sustainability projects off the ground. So it's worth thinking about how you can make the most of that opportunity of interacting with senior management within your organisation. So moving on to ESOS, or rather Article 8 across Europe. As I mentioned previously, ESOS is the UK's response to Article 8 of the Energy Efficiency Directive, but each member state was required to implement their own version of ESOS. Now, broadly speaking, the requirements are the same. It's large organisations have to conduct energy audits, but anyone familiar with the ESOS regulation will know that there's a number of intricacies, and it's the same across Europe, but those intricacies vary from country to country. So, for example, qualification criteria. Whereas in the UK, you need to meet either the headcount threshold or both of the financial thresholds. In some other countries, you need to meet the headcount criteria and at least one of the financial criteria. Similarly, in the UK, all you need to really think about is your UK-based organisation and energy consuming assets. However, in other countries such as Sweden, for example, you need to judge your qualification criteria on a global scale. So if, for example, your organisation has an office in Sweden which only has a couple of people in it, there's still a risk that you might need to comply with the Swedish version of ESOS because you maybe qualify for the UK version of ESOS. Deadlines also vary from country to country. So whereas in the UK, the deadline was for phase 1, the 5th of December 2015, and then subsequently 4 years after that for phase 2 and another for phase 3. In some countries, such as Belgium, there's a 4-year rolling deadline. So if, for example, you complied with ESOS Phase 1 in Belgium on the 4th of November 2015, then you'd be required to comply with Phase 2 in Belgium by the 4th of November 2019. Compliance routes available to businesses vary from country to country. Display energy certificates and Green Deal assessments are obviously bespoke to the UK. Different countries will have their own bespoke routes to compliance. And in some countries, such as France, 14,001 environmental management systems may be used as a permissible route to compliance, so long as they factor in energy audits as part of that management system. Audit thresholds vary from country to country as well. So whereas in the UK, you're required to audit 90% of your energy consumption, in France, for example, you're only required to audit 80% of your energy consumption. Post-audit requirements also vary from country to country. So where in the UK, you're required to notify the Environment Agency of your compliance, in countries such as Germany, there's no requirement to actually notify the government of your compliance unless requested to do so. And finally, penalties vary from country to country. In the UK, fines of up to £50,000 have been made possible. In other countries, the severity of the penalties varies. So in the Czech Republic, you can receive a fine of up to approximately €182,000. So the severity of the penalties does also vary from country to country. So given that the qualification date is a couple of months away and the compliance date is still 13 months away, what can you actually do to prepare now? Well, I think it's useful to map out your organizational structure. As I mentioned, you may be, and we've had a number of clients where this has been the case, You may not be aware of certain other entities within your organizational structure, particularly if you have an overseas parent company. But if you as an organization qualify for ESOS, even if your parent company is based overseas, if they have other subsidiaries in the UK, those businesses will be required to comply with ESOS as well. So mapping out your organizational structure, understanding which different entities are within scope, and looking at which sites are associated with those buildings will allow you to build a site list and work out what you need to measure as part of your 100% energy consumption. Once you've done that, you can look at what different types of energy are used at different sites, and you can establish data collection processes. David will talk a little bit more about good practice when it comes to data collection in a moment. And then finally, once you've done all that, you can identify which sites it makes sense to visit in the reporting year. So as we touched on, if you're disposing of certain sites in 2019, or if certain sites have had more attention than others, then you may want to prioritize other sites for site visits. So finally, I just wanted to highlight a couple of the resources that we have available online. We have an ESOS Phase 2 guide on our website. We also have an ISO 50001 energy management guide. As I say, you can find those on our websites, and we also have a number of blogs which explore the themes touched on today in a little bit more detail. So we have a blog that looks at what's changed from Phase 1 to Phase 2, and we have a blog looking at what's the most effective route to compliance for your organisation. So do take a look at those resources, you might find them useful. Finally, I just wanted to pass on my contact details to everyone. I appreciate that we've run through everything at quite a high speed today. There's quite a lot to cover in our half-an-hour webinar. Please do feel free to reach out if you have any questions, or if you'd like to discuss things in a little bit more detail. But on that note, I want to pass back over to David, who's going to talk a little bit more about good practice when it comes to data collection.
Great, thanks, Dan. And thanks for taking us through where things are with ESOS Phase 2 and some of the different areas within how it's been put into different European countries. That's very helpful for companies. We often find that where people are working across Europe, the first question is trying to figure out how it's different in the different countries. So yeah, thanks for taking us through those areas. So just in the final sort of 5 minutes or so, I'm just going to close out today's webinar by picking up a few kind of trends around collecting data, and then looking at how companies are actually leveraging ESOS once they've completed it, how companies are sort of making the most of those audit exercises to improve their reporting and look at opportunities for implementing some of those projects that have come up through the process. So I'm the head of client services at Greenstone. We provide software to companies to help them manage all of their data. So we're very much on the kind of first step of the process, really, in terms of helping companies identify their boundaries for reporting, managing that data, and identifying what it looks like, and then putting those initiatives into software to help manage them on an ongoing basis. So firstly, in terms of how companies are collecting data, this is just quite a simple overview diagram. So if we look at the top of above the line here, this is kind of the historic process for a lot of organizations in data collection, where they will collect carbon data or energy data, then they'll use that for reporting, and it will be a cycle of data collection and reporting. And what we see much more now is companies moving to an approach that reflects the bottom of the screen, what sits below the line, where there's more of a need and a requirement for continuous data collection. And what we've seen with a lot of companies is that ESOS has been a good driver for, firstly, getting better quality data from across the whole organization and getting it into one place. But then it's also been a catalyst to then move to more frequent data collection, to be able to keep an eye on some of those trends within the year, but to also underpin a more robust data set for things like annual reporting within that. So with that maturity of data collection and a more kind of continuous data collection process, what that then enables clients to do is pull reports from it at various points throughout the system, throughout the year, to then be able to sort of monitor what's then going on outside of the 4-year ESOS cycle. So that's something that we're seeing generally in terms of the companies that are sort of in the best practice sphere of data management and collection. And really that's being driven from an increasing burden for legislation and increasing landscape of reporting. So this is where companies are looking to centralize that data collection and management to then feed into lots of different reporting. So just an example here, it might be that you're collecting your energy data for ESOS, but then actually you would then, with holding that within a centralized place, you can then feed that into lots of other types of reporting. So it could be specific investor requests like CDP or Dow Jones, or it could be more sort of broader frameworks like GRI or the UN Global Compact, where you're leveraging that energy data and information about projects and initiatives to feed into other framework reporting requirements. So that's a sort of key trend that we're seeing in terms of leveraging the exercise of better data management for other reporting needs within there. The other point I just wanted to touch on was that through ESOS, obviously one of the key outputs of that are reports and documents in terms of looking at lists of opportunities for organizations to reduce their energy and be more efficient with what they're doing. And for some organizations, you know, those reports will sit there and not necessarily be leveraged in a way that they can be to help bring them to life and sort of put those opportunities in the context of the business. So from a software perspective, it's just an example here. At Greenstone, we developed an initiative savings functionality within our platform. So this was produced jointly. There's been given a number of awards this year and shortlisted for some other awards as well, to sort of look at how within a software platform, those ESOS initiatives can be migrated into a tool to then visualize the consumption and carbon emission savings that those might achieve in the context of an organization's targets. So being able to set those targets, track those initiatives within there, and then also being able to report on them. So aligning those reporting outputs with things like CDP or other organizations within there. So it's really sort of an example of how organizations that are leveraging the ESOS opportunity, doing the most with those initiatives and looking to move them forward within the organization to achieve savings within that. So that was just a couple of points to touch on to close. So I wanted to thank Dan for taking us through the kind of detailed part of ESOS. Which is, I think, what a lot of people are keen to understand in terms of the distinction with phase 2 and how that's different. For the questions that have come through, we'll pick those questions up directly with people. And then please do feel free to get in touch with us if you have specific needs or questions about your organization and what ESOS means for that. And then Dan or myself can get in touch with you. So yeah, thank you again for attending on behalf of Carbon Smart and Greenstone, and good luck with ESOS Phase 2. Thanks.